In this video, Jim Cramer emphasizes his mission to empower investors amidst a market divided between struggling momentum stocks and resilient traditional growth companies like J&J and Coca-Cola. He underscores the significance of upcoming earnings reports this week from notable firms such as Domino's Pizza and Tera Energy, which could shed light on consumer trends and the energy sector. Cramer urges investors to be strategic with their investments, especially with aggressive growth stocks, and mentions upcoming analysis around natural gas prices, encouraging his audience to remain engaged with the ongoing market fluctuations and pressing questions.
Levels is just rich? Is it the poor? Is it the middle? Is it temporary? Why don't we listen to Russell Weiner? He's the CEO of Domino's. He's a straight shooter. He's going to give us some real insight. After the close, we get results from Tera Energy. That's one of the best oil and gas companies, which is why we own it for the Charitable Trust. With natural gas back up to $4, more on that later when we interview the CEO of EQT, the big natural gas company, I think the future looks bright for this group. We also hear from one of my favorite real estate investment trusts. I know, boring. You know what? I like making money. It's never boring. Realty Income, letter O. I'm partial to this one because it pays a monthly dividend, which just got boosted earlier this week. I also care about Cleveland-Cliffs, so when it reports, as this steel company has been beaten up by cheap exports from China via Mexico, transshipment they call it. I worry about how it's doing and whether the U.S. can actually stop these darn subsidized transshipped imports. Finally, I have to tell you, there's one stock that's become a true battleground here, and I don't mean Palantir. I'm talking about a stock called Hims & Hers Health. That's an online healthcare company that currently offers a less expensive alternative to the GLP-1 weight loss drugs, as long as they're relatively unavailable. Now, today, the FDA said that Novo Nordisk GLP-1 formulation is no longer in short supply, which could mean that the compounding pharmacies that are making similar versions of the drug have to stop. Now, Hims & Hers has said it can still make the cheaper version some way, but the market seems skeptical. Hence, the stock's astounding 26% collapse today. But then again, it's still up more than 100% year to date. So profit-taking, I don't know, makes sense to me. Tuesday morning's big. All right. We own Home Depot for the Charitable Trust, and we want to build a large position ahead of eventual rate cuts. And as I said yesterday on our monthly conference call, we expect a soft quarter because of weak housing. But the company will benefit from the need to rebuild after major storms both in the Southeast and the fires in Los Angeles. Now, next there's Planet Fitness. This is one, it's a puzzle. It's a puzzle. Many stocks are puzzles. I think young people are more health conscious these days. They're trying to stay in shape, avoid unhealthy foods, and, of course, beverages like liquor. Will Planet Fitness verify that thesis? I bet they do. How about a sleeper stock? One that's withstood the selling. Sempra. Sempra's a growth utility with a decent yield and a lot of opportunity. CEO Jeff Martin, that guessed many times, can show you that his stock offered a better return than most of the traditional growth names. You know, when this might be worth buying on weakness, I'm debating to put it in the Charitable Trust. After the close, we hear from Workday. That's an enterprise software company that got downgraded this week because of the possibility of softer sales. The enterprise software group is really at the heart of this market's weakness. If the sales are soft, I expect much more downside. Now, have you seen the action in Cava of late? This once beloved restaurant stock, although a still beloved chain, has plummeted. And it's not because of the last quarter, which was stellar. I bet they reported another set of great numbers. But when Wall Street has turned against momentum stocks, it doesn't matter how well your business is doing. File Cava away if the quarter's great. We're circling back at lower levels. Wednesday, new home sales. Oh, boy. This group has really just taken a licking. You know, it's basically a jailbreak of selling caused by a combination of bad weather and, more important, high mortgage rates. It's crushing the home builders. We need a pickup to verify that housing isn't just falling off a cliff at this point. I'm actually not hopeful. The incredibly reliable Toll Brothers called the spring selling season mixed. That's not what we want to hear. We also hear from Lowe's, which is always a horse race with Home Depot, but has been a standout performer for years. Its stock never soars. It just quietly goes higher. I love that. After the close, we get some fireworks. There's Salesforce. Oh, boy, which is thought to be doing very well, but don't tell that to the shareholders who have been shellacked in a battle wave of selling. This is a richly valued momentum stock, although a stock, by the way, like ServiceNow, is much more expensive. Then there's Snowflake, the rent-the-cloud play that's become far more than that. Really, it's a real advisor to those who want to learn more about how to use artificial intelligence in the business. And then there's the most important company report this week, if not this year, okay? NVIDIA. We had many reports offering forecasts of how the $3 trillion AI and accelerated computing company might be doing. They all came out today. They were all positive. All I can tell you is that we had a huge sell-off in the semis today, and the chief index off 3%. That's not a good sign for NVIDIA, which got decked, and it fell a sickening 4%. I say own it, don't trade it. but our strength may be tested by the possibility of a slow ramp in its Blackwell platform launch. New iterations of NVIDIA's chips have always been questioned for their worth. I bet CEO Jensen Huang offers a clear path for those who want to join the new industrial revolution that he's helped create. Oh, I hope it matters. Thursday starts with the gross domestic product read, and I think it will be strong as part of a business euphoria we got after the election, when the consensus quickly built that President Trump would be much better for business than his Democratic predecessor. Today we saw interest rates fall. That's a pattern we had all week, which suggests that this GDP reading might be the last strong one. Again, that's not what I say. It's just what I'm looking at. That's what the market's telling me. In this tougher environment, the cruise stocks, well, they've held up relatively well. Can Norwegian Cruise keep its winning streak going? Not clear. We got a couple of key momentum stocks reporting. Vistra, that's a power producer with nuclear exposure, making it a favorite stock among people who want to bet on the data center-driven electricity shortage. I saw GE Vernova get trashed as part of the anti-momentum trade today. Maybe a positive reaction to Vistra could signal that the selling's over. I don't want to hold my breath. After the close, Dell Technologies reports. This one's crucial. Its stock was clocked last time, and I think it could make a comeback, given that it helps companies adopt NVIDIA's AI platform. Great company with a terrific CEO, Michael Dell. I don't believe it'll miss twice in a row. That last quarter I didn't like. Finally, Friday, we get the personal consumption expenditure number. Now, this is the Fed favorite inflation gauge. We saw real strength in bonds this week, which produces lower interest rates. Maybe it's because of the slackening of inflation. That would be good. Or maybe it's because the economy is cooling. Not so hot and definitely bad for earnings. The PC reading, it could be dispositive here. So let me give you the bottom line. Out of nowhere, the momentum stocks had a hideous downturn today. It's hurt many aggressive growth investors. Can this pullback finally run its course? I hope so. If not, my prediction, more of
the House of Pain.